Welcome back to The Money Show. If you've had a hectic day today and you've missed out on everything that's happened, all you need to know is that the SARB has left interest rates unchanged, so no cut today. The penultimate decision before the one in November. The repo rate stays at 7%. 10.5% is your prime lending rate. So sort out your budgets accordingly. We've had a WhatsApp from one of our listeners, Eric, saying he's happy about the repo rate staying unchanged. He says, I'm a pensioner, so it's part of my income. Then looking at another conversation now around banks. And I want you to think about the use of your apps and how fintech has changed our lives and how more and more of us are using less and less cash. Now, banks are currently evolving, transforming to become world banking leaders around the world. The global survey conducted on behalf of KPMG International showing that bank leaders shared the areas they believe will be the greatest strategic performances over the next 2 years. So a lot of our banks are looking to change the way they do things and at the same time save themselves money and at least, of course, make more money. Auguste Claude-Nguetsop, the financial services sector leader at KPMG Southern Africa, joining us for this conversation. What would you say are the top three concerns for the banking leaders around the world?
Sure. Thank you, Motheo, for having me on the show, and a very good evening to your listener. And yes, so to your question about the top three concerns, right, of bank leaders across the world. So what our survey actually showed, we actually interviewed more than 250 banks across the world, and three key area of concern came up, right? The first one is really that the banks are struggling to remain competitive, right, to really keep a high margin on the operation. The second key concern we found as well is that, those banks are really looking at ways to use AI to automate the operation to better service customers. So really trying to use AI more. The third one was really something that we found that key area is that is digital everywhere, right? Digital banking is really everywhere today in our apps. You mentioned the apps in the banking space. So banks really are looking to use digital advances from data sciences to provide more digital services. And on the back of that, of course, you have to handle cyber risk and cyber threats, right? This is really what we found from our survey across the world, yes.
Here in South Africa, the trend has really been, doing away more and more with ATMs. So withdrawing cash, something that's likely to be a thing of the past as more banks cut out the ATM rollouts, but also, going into a branch and doing your banking has become a thing of the past as well because we're either on our laptops or on our phones. Is this a trend that you're seeing around the world that people are looking to more digital banking, and who are some of the leaders in terms of that space?
No, you're absolutely right, Motheo. So that trend that we see in our market here, where there's really a tendency to operate without any cash, that's really something we're seeing across the world. And something on the back of that is really something which is maybe not yet here in our SA market, is the growth of what we call digital currency or cryptocurrency, which is really something on the back of all these trends where, the historical pattern of engaging with money is changing across the world, or the banking space is changing across the world. So that is really a trend that's going to, from our observation, that's going to stay and basically be here with us for a long time. There's a small difference I want you to mention maybe here is that, in the rest of the world or more advanced markets, that trend, the cashless society is more advanced. So there's less innovation in the payment space, for instance, right, in the rest of the world compared to emerging markets, our market, for instance. So this is really the small trend we're seeing here, small differences, where we could say that, payment, we have a bit more fintech payment here on the continent, but on AI or digital currency, the rest of the world is slightly ahead of us. Yes.
When we look at the embedding of artificial intelligence in the banking sector, of course, these businesses are there to make money. So Is this AI going to be used for customer relations? You will be chatting to a bot about your account and what you'd like to do, or are they going to be using the AI so that we as customers get a better experience when we're on their platforms?
No, Motheo, I think this is really a very interesting point, and I think we're already familiar with chatbots, right? In the way we interact with banking today, so we already know what banks are already doing to use AI to enable and make our interaction a bit easier or more friendly. So it's already there. What is coming really is that we have now AI used beyond that. So AI used to help banks actually originate new products, right? So you can actually use AI to look at the bank's balance sheet, and from there you can derive some specific products you can actually use to help the banks better manage their risk, for instance. So it's really that advance in AI that we're seeing here, where AI goes beyond just the automation of tasks to actually creating something. We saw it with what is called more and more either agentic AI or generative AI, both of them creating products for us. So it's really moving beyond that. I think one concern we're seeing as well is that we think AI may actually take away jobs from us, and that concern is really there. But when you look historically, advances like AI, it actually tend to create more opportunities for banks and for us, for customers, to be more productive. So there's really an element there of course of fear, but also of large promise to do quite a lot using AI.
Then just finally, looking at the new agenda, the banking transformation survey of KPMG International, a lot of the respondents, around 82%, say they plan to reduce their cost base by more than 10% by 2030. Now, reducing of costs could be a lot of things. Looking at the banking sector, where do you think they're going to be shaving?
That's a very very interesting one. And look, what we're seeing, I will just mention three or four key things, right? So when you look at the banks, for instance, today, what we're seeing is that large part of the cost of banks are in infrastructures, right? In basically your technologies. So you have large core banking systems that are used to run banks, large trading systems for treasury system like Murex, which is used by large banks to run trading operation. So what we see is that those are massive programs in banks that cost a lot. So when banks try to reduce costs, they tend to actually see how they could automate more the services by using technology and reducing costs around using technology around that part. So technology cost reduction is one part. Secondly, it's of course human resources is to see how we can use less people to do the same work. This is really what AI is enabling. So second part there. I think the third part, which we think is also quite important, is the fact that when you are moving digital, you basically need less and less physical infrastructures. You don't have branches, so that also reduces costs, in the bank's operation. So all those together actually help banks to reduce their costs and service clients without actually affecting too much how we experience our connection with our banks. Yeah.
All right, the banking sector moving towards a cashless society, but also looking to cut costs. So that could mean a lot of jobs lost in the market. Auguste Claude-Nguetsop, financial services sector leader at KPMG Southern Africa.